Welcome back. My name is Arya, and I don't waste your time, so let's get straight into it. Ladies and gentlemen, I do want to preface this video by saying this is not your usual quality investing with Arya programming. It's going to be a little bit more of a laid-back video. I asked you guys over on Twitter to drop me your portfolios with as much or as little detail as you want. And to my surprise, we got around 60 replies from individual people, so it should be fun. I'm going to try to be honest with what I think, but at the same time, I'm going to try to deliver it in a manner where hopefully it doesn't come off too rude and all that type of stuff. If you're included in this video, don't take it any particular way. I'm just sharing my thoughts here. Also, one thing before we move on, I got a mic stand, so you know it's getting serious. It's really getting serious here. We're reinvesting back into the YouTube channel. Should be fun. Last month I got the lights, now I got the mic stand. We're going to do some stuff in the background. Should be great. Anyways, I kind of gave you like a sample of like what I was looking for, and some of you guys replied under this. It is what it is, but anyways. So first and foremost, we have Balaj Quality Investor, and his portfolio is eerily similar to mine. We share 3 holdings here, technically 4, I mean, if you want to include cash, but he has 35% in Amazon, 33% in Google, 12% NVIDIA, 9% ASML, and 11% cash. I think that's a fantastic portfolio. Highly concentrated, which is something that I applaud. These are wide moat tech businesses. They all grow their earnings like above a 20% clip on an annual basis. The only thing I would maybe question is like, when did you get into these companies? Which honestly doesn't matter too much. I think they're all around fair value even today, or slightly undervalued in the case of like Google and ASML. I think he has a fantastic portfolio. In my opinion, you're going to do a great job outperforming. Spike, he has PayPal, Mercado Libre, Google. Those are his largest holdings. And then he has a mix of Salesforce, Visa, Brookfield, TDW, not sure what that is, and Ulta Beauty. I would question the PayPal position. I just don't see that growing in the next decade. Depends how long like you're holding for. If it's like a swing trade type thing that you picked up the shares when it was like a 12 PE, you're going to sell it in like, I don't know, the coming year or whatever the case is. I guess that works. Mercado Libre, I applaud that. I think it's a great business. Google, love that company. Salesforce, Visa, Brookfield, love those. And then TDW, I'm not really familiar. Ulta, it's a retailer. It's cheap, whatever the case is. Next up, we have Michael. He's a 56-year-old Canadian who has been investing since 2012. And his investment philosophy is quality companies that, and then GARP, which is growth at a reasonable price. And it seems he is, just looking through the holdings here, I'm not going to go through all of them. It seems he's following that. NVIDIA, massive position. I'd assume that's a pretty big winner, just judging by his position sizing with the other ones. I'd imagine this was like a sub 10% position that grew to the 25%. Cash at 8%, safe. Amazon, love that. Broadcom, interesting. So what is that? Around 36% of his position is tied to 2 big semiconductor names. I guess they've worked out wonderfully for him. So kudos to you. And then we see a healthy amount of big tech, Salesforce, MasterCard. The only advice I have for you, maybe trim off some of these smaller positions that like don't really account for that much of your performance anyways. Try to consolidate into some of these bigger bets. I don't know. In my opinion, what is this? About like 12-ish, maybe a little bit more holdings. I would just maybe consolidate a little bit more. Like Kinzel and Lockheed, they're not even seen right here, right? Overall, great portfolio. I like it. Eric is a 21-year-old undergraduate student investing 40% of little income I have per month. My goal is to build wealth plus beat the markets. And so that is a long list of holdings right there. He has a 17% position in Apple that he possibly wants to trim. I would probably say, yes, you should trim. I think Apple trades at like a 36 PE or something like that, something crazy. I would probably lean on the side of, you could even trim and like still stay in big tech. Like you could, and you have Google already. You could trim and go into Google. You could trim and go into Amazon maybe. Oh, I should preface by saying, of course, not financial advice at all. That I should also maybe mention this at the start of the video, but no financial advice at all. Not a financial advisor. All the necessary disclosures and that type of stuff. Just sharing my thoughts. Yeah, maybe you should trim the Apple and look into maybe even other big tech. Like Google and Amazon are pretty cheap. Visa trades around fair value. Overall, I like your holdings. A lot of quality names. I, at some point or another, have actually considered buying into every single one of these holdings. Again, similar advice to the gentleman I just gave right before this. I would maybe look to either build up these positions bigger, some of these smaller positions, or just get rid of them. There's no point having like a 2-3% position. I think I'm going to have to say that a lot throughout this video. Next up, we have Stoic, 26-year-old investing $1,500 per month. His goal is to build wealth, and here are his stocks. A lot of Amazon, a lot of new bank, I believe, is just a growth monster. It's a Brazilian I believe, or like South American, sort of like fintech company, similar-ish to like, again, I don't really know it that well, but similar-ish to like what we have as like a PayPal and like a digital bank, similar to like a EQ Bank in Canada. We have that. It's like all kind of like the same thing, and it's like I think it's payment terminals. Again, I'm not too sure, but it's growing incredibly fast. I do like it. It's just I don't have any hands-on experience with it, so me personally, I haven't really looked too much into it. That's kind of like a big red flag for me. Any consumer-facing company where I don't have first-hand experience going into their stores or using their products. Again, consumer-facing companies that I can't use, I just generally try to stay away from it. A little bit of S&P, Disney. I don't know, maybe too heavy on the Disney. I do like Disney as a whole. I think they're going to do well in the future, but 18% is really putting a lot of MicroStrategy. I just completely disagree with that. Robinhood, again, I don't use it personally, but I've heard good things, so it's okay. Palantir, yeah, Palantir 4%. It's 4%, whatever. Maybe I'm wrong. I think we're gonna see Palantir as we go on here a little bit further down the line. Next up, we have Dividend Dude, a friend of the show, and I'm very familiar with his portfolio. Overall, I like the bigger holdings. Celsius he recently bought into. I don't know, a little bit too heavy on, especially like a trendy company. Like I question whether outside of like the next year, 2 years, it's going to be successful. Salesforce, you guys know my thoughts on Salesforce. It's a 30% company in my portfolio. Love that. Google, actually we have the same allocation to Google, 19% both of us. Visa, I have MasterCard, so whatever. Taiwan Semi, been on a tear. Love that one. Texas Roadhouse, again, I haven't been to the restaurants. I can't really speak too much about the restaurant experience on that type of front. It has incredible growth. I think it's a very premium trading restaurant business. Hims, whatever. Microsoft, such a small position. Okay, so the one issue I have with this portfolio is it kind of has, like, you can't decide where you want, what the trajectory, you can't really decide the trajectory of like how you want to take your portfolio. You have a lot of tech companies in here, and then you have like Celsius, which is like a sort of like a turnaround play. You have a kind of like a boomer safe restaurant pick. It's kind of all over the place, and then you have like speculative positions and High Tide and Hims, right? Like it's kind of all over the place. That's the only critique I'd give my friend Dividend Dude. Other than that, overall, I like the portfolio. I think the top, call it maybe 50-60% of the portfolio, so like all these holdings until TSMC, maybe X out Celsius, I think those will really be carrying the returns of the portfolio in the future. Those are like the most solid bets. Overall, good portfolio. I like it. We have another friend of the show here, Dividend Dynasty, and he is very heavy into PayPal. I didn't realize he's actually 28% into PayPal. That is quite the conviction. I'd assume a good amount of that is gains. He says, here's mine. I've been investing since January 2021. My aim is to have a focused portfolio where I buy above average businesses that trade below the market average, looking to outperform the index over the long term. And so, I mean, it seems that he's living true to what he said. We got PayPal, Alta, and Alibaba, Google, Visa. I mean, it's just the top 5 right there is all at some point in the recent, call it 1 or 2 years, they've traded below the S&P 500 average while growing faster than the S&P 500. I applaud that you're following your strategy. I do disagree with, like, again, probably like PayPal and Alibaba, although they've both done pretty well recently. So who am I to judge, right? And then again, the same critique, I just keep giving it over and over again. Anything under like the 3% area here is just like, it's not really going to be impacting your returns that much. Even if it doubles, congratulations. That's like it now makes up 6% of the portfolio. Like it doesn't really have that much impact on the portfolio's returns. I would look to maybe exit some of those or build them further into a bigger position. Of course, if you have a situation like, for example, MSCI is a decently expensive business at the moment. If you really like that business, maybe you're just sitting on the sidelines for the next year until the opportunity presents itself to make that a bigger position. If that's the case, then I would just keep it there. Other than that, I would look to exit some of these smaller businesses. I just don't understand, unless it's like speculative plays, but it doesn't really look like it. I don't know what Cakebox is, but like these are very solid businesses. I don't think they're speculative by any regard. Another friend of the show, Newcomer Investor, and actually we have a I did his podcast a couple days ago. It'll be coming out, I think, in like a week, give or take, 2 weeks. I'm not sure. But anyways, go over on Spotify. If you search up Newcomer Investor, there's going to be a podcast that comes out. I'll be on that podcast. We had an amazing chat. Lots of great information was kind of shared back and forth. And so here's his portfolio. He has a massive weighing into Brookfield. When I spoke to him, I think he's up around double on Brookfield. So it was initially about an 8% position. He's been investing in it since 2019, if I remember correctly. Great company. I'm actually looking into Brookfield recently. It grows at like 20% for the past, I don't know, give or take decade, and it's trading at below essentially 20 times free cash flow, even though it's distributable earnings, but it's trading around like 10 times free cash flow, if you will. A lot of holdings. My only critique to him is like really go through like these 1% positions in like AT&T and like QSR, Baba. Like these companies are not going to be impacting your portfolio returns at all. I would literally anything under like a 2% allocation size, I would just get rid of it if I was in his shoes literally tomorrow, and just concentrate into your bigger holdings. Even concentrate into like, I don't know, Brookfield, at even though like it's ran literally 100%, like it still isn't the worst price in my opinion. Next up, we have Prabesh. He's a 35-year-old investing about $3,000 per month. His goal is to gain financial independence, and he follows again, growth at a reasonable price principle, and he likes dividends. And so these are his portfolio holdings. Again, like not much disagreement here. We have Amazon, Mercado Libre, Apple. At 11%, I question that. I would look to put it in other places. Axon, I do really like Axon. So they have the body cameras, and it's a monster growth business. It does trade at like 100 PE. So I don't know what price you got in on that, but I applaud you for at least having it in the portfolio. Realty Income is just like, it sticks out like a sore thumb. I mean, just talk about polar opposites in terms of you have all these fast growing businesses, minus Apple, and then you go to Realty Income, hardcore dividends, monthly paying, all that type of stuff. I don't know, maybe you got like a little Berkshire Hathaway going on over there where you get the dividends and you distribute them into whatever is in a dip at the time. Anyways, overall, I like the holdings. I would, again, question the AMD down here, the Johnson & Johnson. I would look to maybe see like what is the purpose of some of these holdings. It's again kind of all over the place. Like Dividend Dude, overall I like the portfolio. I like the top holdings especially. Worst finance takes. Oh, this is interesting. So he has 60% meme stocks, 10% index fund, and ladies and gentlemen, I don't know how percentages work, but it seems we've added up to 170% based off of his math here. And finally, at the end of his portfolio, he has 80% lottery tickets. What a fascinating portfolio. He also rents a studio apartment and owns 6 Toyota Corollas, making passive income, of course. Again, if you can't tell, I assume this is just a complete joke. Very funny. Then we have Investment Kage, and it's actually pronounced Kage. I've personally asked him. He said, "Yo, I can send you mine," but then he didn't send it. So I don't know what happened there. Mr. Seymour Duck, another friend of the show. And I actually really love his portfolio. One, because it's like pretty contrarian. Like these businesses you look through, like Samsung. Have you ever even heard of anyone that owns any Samsung stock? Me personally, never. Evolution Gaming, we've done a bunch of videos on it on the channel. It's actually gone down a lot recently, and I'm probably thinking of doing another video on it just to follow up of like what is going on. They do report earnings in about 3 days, so we'll see what happens there. But nonetheless, I don't even recognize some of these. I think that's Tencent, Nintendo, 5253. I have no idea what stock that is. Overall, I like the conviction into literally all international stocks other than Disney, which Disney in of itself is a contrarian pick as well. I like the conviction. I actually think he will outperform. I think Samsung at 30% is a little bit of a damper on growth for the portfolio, but other than that, all the other companies, to my knowledge, are growing pretty well above like a 10-15% clip. He should be doing okay. I like the concentration. I like the conviction. Oh, Cover Corp is the last one. I have no idea what that is. Professional stock market amateur. This is a fellow ASML bull, so absolutely love this guy. And if we take a look at his portfolio, it kind of hurts my eyes that it's not sorted by percentage. But anyways, he has ASML as his biggest holding, 26%. A lot of conviction. Evolution Gaming, another fellow Evo enthusiast. We have Amazon as his third biggest position. Again, I agree with all these names. MongoDB recently had, and I saw Brian Stoffel's video on this where I think he sold out or whatever the case is. So a little bit questionable with the future of that business over there. But other than that, I applaud you on all the different companies in here. Concentrated as I like it. This one, I think it gets the outperform rating from me. Just your top 3 or top 4 companies there. I think those will definitely carry the returns there. D Invests. He is a Welsh investor focused on quality and or undervalued businesses with leading market positions. His top 10 holdings, 18 holdings total. I like the tickers here. I think Starbucks. I don't really know much about EW. Estee Lauder. Wow, that is a contrarian pick. Adyen, like that one. Ulta, Dollar General. Again, a lot of turnarounds. And he does mention he's and it seems it's a decent bit contrarian and focused on undervalued kind of sort of value businesses. Abyss Walker, I really love this guy. So I've been begging him to, I've been asking him, just please start posting on Twitter, make like a Twitter page, all that type of stuff. Very, very smart guy. We've gone back and forth on DMs. If I'm going to link his thing in the description, just if you guys could maybe go, even though he doesn't post, but just go maybe follow him, maybe push him to open up a Twitter account. And so he has, look at this concentration. He's making me look bad with the level of concentration I have in my portfolio. He has 42% Amazon, 30% Google, 17% Disney. I mentioned I like Disney. And then 11% in CrowdStrike. He's looking to buy maybe MasterCard or either of Oracle and Salesforce. I completely applaud this portfolio. I think all of these businesses are going to have sustainable high teens or even higher in the case of CrowdStrike and Amazon. You're looking at like over 20% bottom line growth in the next, call it 5 years or whatever the case is. I think it's a fantastic portfolio. There's a very slim chance that he's going to underperform in the, call it, next 5 to 7 years, in my personal. Next up, we have Finfluential. He's a fellow YouTuber. At the start of this year, I gave you my top high conviction undervalued stock. That portfolio has gained 35%, and the comparison is below. I don't know where your holdings are, sir. Okay, I found them. Here are the top undervalued stocks. And so he put ASML, Salesforce, so software I own 2 out of 2. Cisco. Wow, Cisco. That's incredible. Cisco's a very boomer business. I mean, it doesn't really grow at all. Accenture, this is the consulting company, and actually it's about the same price, I believe. I don't know what the price was at the time. I think this fair value is different than the whatever. Nvidia was $550. Wow, Nvidia. Nvidia was, so it's $55 adjusted, right? Google 145 kind of traded flat-ish. Charles Schwab Bank, PayPal, Alibaba, American Express. I don't know what that is. Interesting. Yeah, I mean, you've done well on like 8 out of 10 of those companies. Again, fellow YouTuber. I believe he does more like technical analysis and stuff. Nonetheless, you guys should check out his channel. Everyday Stocks, another friend of the channel, and he's wrote us an essay here. Portfolio here, basically strategy is long-term buy and hold, investing looking for high-quality companies, some growth, and some are more mature, but they all aim to be special quality compounders in the long term, aim to beat the S&P, and he's also a fellow user of finchat.io, which I am affiliated with. You could use it using the top link in the description down below if you're interested. Actually, most of these charts are coming from FinChat. And so this is his portfolio here. A lot of different holdings. I completely disagree with the Palantir hold. I mean, I just look here and there's multiple better opportunities. Again, similar thing that I mentioned earlier. I would just look with these bottom couple percent, 3-4% holdings. Just look to see, like, could you consolidate into higher conviction bets? Realistically, they're not going to contribute that much to your performance. Other than that, I like the list of companies here. A lot of different growth companies. You got the likes of like Spotify, Meta, New, CrowdStrike, Shopify. Shopify is a growth monster. Overall, I like it very much. I mean, I feel like we're running into so many different friends here. We got Quality Equities, and his portfolio is highly concentrated into what seems like, actually, maybe not. I was going to say big tech, but he has, actually, no, he does have a good amount of big tech in there. I think it's roughly like 40% of the portfolios in big tech, maybe even more. Oh, he has Apple and Microsoft down here. Yeah, so is that all of the Mag 7 minus Tesla? Incredible. So he has the Mag 6 essentially, and then you have some filler positions, quality companies around that. You got your Visa, SPGI, Classic, PayPal. It seems you've done well on that. The Costco position, I just don't understand how anyone is holding on to Costco when like Google's at a 20 PE. Like is Costco's moat that much better to buy Google 2.5 times cheaper? I just don't understand it. I would maybe look to see even like something, I don't know, more safe, I guess, if you will, like away from tech. United Health Group, like it doesn't trade that far off and it grows double as fast. I don't know. I would just look to maybe exit the Costco position. Other than that, I like the company. I like all the companies here. We have Braden Russell here, 34-year-old, invests about $500 a month, big mortgage, living just outside of Vancouver. Yeah, I mean, Vancouver is expensive. Goal is to outpace the S&P 500. Current performance is a little less than 2 times what the S&P has done. Started February 2021, and I mean, kudos to you for actually, tracking the S&P or tracking your performance against the S&P. Most people don't even do that. And we see a big tilt towards Canadian companies here. I would assume there's some sort of tax advantage there. You have Constellation Software, which is a monster company. You have Topicus, Lumine, and Syngenity. I would assume these are all the spin-outs from Constellation. So you're looking at, I don't know, give or take 25, maybe even more, 30% of the portfolio is just Constellation software companies or spin-outs. And then you have 20% in Brookfield. So about half of the portfolio is just the quality compounders of Canada. ASML at 15%. I absolutely applaud that. You have some construction companies. You have MasterCard and Visa, about 8%. Great portfolio. I mean, I don't really know much about these construction companies and these smaller holdings here, but about 70% of your portfolio I'm very familiar with. I'm confident in like essentially all of these companies over to ASML, and then the payments companies. I think these will lead you to outperformance in the long term. Overall looks good. I just don't know about the other ones. We have Rich Eats here, and I'm going to probably start wrapping it up at the end here. This video is running pretty long, and he is 100% invested in cash. I would highly discourage that. If it's cash, if it's in like treasuries or something like that, I guess, but I would just, I don't know. If your goal is to build wealth in the long term, I would discourage holding treasuries or cash or any of that. Just put it in some sort of ETF at least, unless it's like money that like you need immediately or like you might need in the future. I don't know. It really depends. Like 100% cash is very situational. Depends what is going on in your life and your financial life and all that type of stuff. Apologies, I'm not going to be able to get to all of these just because the video would be literally an hour long. Maybe a couple more, and then we're going to wrap it up here. We have Alejandro and Salesforce at 19%, Visa 15%. Don't know what that is. Axon, I like that one. I mentioned that. And we're kind of noticing a lot of repeat companies here. It seems the FinTwit space. A lot of people buying very similar companies. Tilt towards growth companies. TMBX at 8%. I would assume a lot of that is gains. I do like that. I like the pretty fast growth in terms of the mix of TMDX, Exxon, and Mercado Libre. I like these companies. Overall, I think you have a pretty good chance at outperforming the market. ADP, a little bit on the slower growing side of things. I don't know if I like that too much. Okay, and I think with Max here, I think we're going to wrap it up at the end here. He has 35%. He has more Salesforce than I do. He has 35% in Salesforce. Mercado Libre, which is, they say it's the Amazon of South America. Realistically, it's just the e-commerce, and I think that payments as well. So e-commerce and payments, 35%, or 33% Mercado Libre, 35% Salesforce, 22% in Amazon. I mean, we share those two holdings. And then Dino Polska, very, very random for, this is the, I believe, Polish grocery company. And it's been a quality compounder for many, many years, 10%. I like the concentration. I applaud you for that. I would maybe just question the Dino Polska pick here. Other than that, I think these three alone will carry you to massive outperformance in the future. And ladies and gentlemen, that about wraps it up. Maybe we'll turn this into like a future series where I do kind of like community things of like ask you what is your highest conviction stock, and maybe we'll do that for the next one. What's your biggest holding and why? And we kind of do like an overview again. With that being said, thank you very much for watching. Be sure to check out FinChat. A lot of these charts are from FinChat. This one, that one. It seems a lot of people that follow me over on Twitter, they've kind of picked up on the fact that FinChat is just an absolutely beautiful piece of software. Highly recommend you just give it a try. It's a top link in the description down below. And lastly, you should subscribe because it costs you nothing. Thank you very much for watching. Have a great day.